a session that is centered on partnerships for success. One of the key things that we are looking at is to be able to have insurtech insurance companies build partnerships that are lasting and sustainable. And so today's session would pay particular attention to what it is that insurance companies require in order that we can see what insurtechs are providing so that we find a convergence point to be able to build lasting relationships. And for the cohorts, I would like to state that in the last few weeks or months, we have had conversations with speakers who have engaged us on our products, our services, the concepts that we have, how we would be able to make our products ready for markets, and etc. But beyond all of this, you need to be able to build partnerships in order that you can be able to make the products and services that you have market ready. And how do you do that? You do that because you want to be able to sustain your business. And so today's session will pay particular attention to what it is that we have insurance companies presently doing, and what are the innovations that they are presently undertaking, and where are the gaps, where do they need you to join the ecosystem. And so these are some of the things that we will do today. We are also fortunate to have one very experienced insurtech joining us. And so this conversation would also center around the challenges that insurtechs presently have. For example, the procurement processes around getting insurtechs to be able to work in the insurance space. There are also challenges with, for example, if you develop your concepts, the concepts are not readily paid for. And so are these challenges existential threats to insurtechs? And so these conversations would largely center on this. And I also like to state that as the moderator for this program, I would plead that we make this conversation a very more participatory than ever. I know that today is more or less a breakthrough for many of us. And so let's be more engaging. Let's try to appreciate what it is that we can get along within this value chain. I also want to state that on behalf of FSD Africa, on behalf of the Telistic and the National Insurance Commission, I welcome all of you to today's session. I believe that we would have a very thrilling and exciting session. Very mindful that we have key industry players who would take us through what it is that they have, and then we also engage them and see where we can connect in terms of partnership and etc. But without much ado, let me first of all call upon Mr. Alex Chumesi. Mr. Alex Chumesi is the commercial business head for Star Life Assurance, to first of all introduce himself to us and tell us basically what he does at Star Life. Thank you.
Very well. Good evening to all of us here. Hello.
Good
Hi.
evening.
Good evening, Alex.
I've been in a meeting throughout the day, so I needed to sneak out. So we'll have to do it this way. I'm grateful to be part of this session. I'm in this session with my deputy, that is Francis Kutuchi, who is currently in the office. I had to sneak out because I've been sitting from morning till 4. So we are looking forward to a very lively session. What we do in Star Life, I'm basically in charge of the alternate channel of distribution. And we are looking at the insurtech area, the fintech area, basically fintech. We are also looking at bank assurance, brand assurance. We have what we call the church assurance. We also have this the corporate area, the group business. These are out of the conventional way of selling insurance. So we are basically looking at your area of interest. And from today's session, I would like to have a minimum of about 2 or 3 people to partner with to start some good business because we have been very good at this. I'll be sharing some few things with you. With the help of my deputy, we'll share a lot, and I know you'll be blown off
Wow.
by the end of this session to be part of us. We are the right people to talk to when it comes to partnership. That's basically what my opening remarks for now.
Absolutely. Very exciting to hear that they are looking for partnership. And let me just state that Star Life is one of the lead life insurance company when it comes to top line and even consumer behavior and etc. And so we are excited to have them join this conversation. Already, I'm sure that the cohorts are excited to hear that the Star Life would want to form partnerships. Then okay, so we don't have Mr. Takona immediately. So let me call
We
on.
do.
Oh, right.
Yes, we do.
Great. Thank you for joining, sir. He's the managing director for Old Mutual Life Insurance. We are excited to have you here. Just earlier on, I was taking the team through the conversation for today. I mentioned that essentially today is a convergence point where we are going to look at potential partnerships that can be formed between these insurtechs and then insurance companies, and who are the best people to talk to than Old Mutual and Star Life. And so we are excited to have you here. Without much ado, can you please introduce yourself to us, sir? Thank you.
Thanks, Hafiz. So I think you've basically done a good introduction of who I am. So my name is Daona. I'm currently looking after the Old Mutual Ghana business. I guess in terms of myself, I'm of Zimbabwean. Well, I was born in Zimbabwe, and yeah, I've been in Ghana for probably 3.5, close to 3.5 years now. I think in terms of the reason why we are interested in this thing is mainly because it's one of the strategies that we have really looked at in terms of trying to grow our business is through partnerships. I think the reality is that is the way of the future. At the moment, not many people actually know how to actually do it, but the reality is that when you look at insurance penetration, when you even look at insurance coverage, the way in which insurance is going to spread and is going to be distributed in future is definitely through partnerships and definitely through, well, not just technology, but non-traditional ways of actual distribution. Um, I think what I always tell my colleagues is that this issue of us saying insurance is sold, not bought, is a problem, and it's a mindset that we need to actually change. If we continue to think like that, very soon we'll be history. We must find a way of making sure that insurance is bought, not sold. That is our number one goal, and that is so. When I look at what we are trying to achieve from this, that is what we are trying to achieve from this, and that's why we are interested in insurtechs. How do you find ways in which we make insurance attractive enough for people to want to buy it, for people to pull it rather than for us to be pushing it? Thanks, Hafiz.
Absolutely. Thank you very much. Insurance should be bought rather than sold. So let me just change hats more. We've dealt with industry players. And so we have, as one of the key speakers, Mr. Tunde Salako. Mr. Tunde Salako is actually the managing partner, African InsurTech Lab. And we are excited to have you here. So kindly introduce yourself to us. Thank you.
Fantastic. Thanks a lot, Hafiz. And hello, everyone. All protocols observed, and greetings to fellow co-panelists. I'm excited to be here, and I heard everything that the co-panelists have eloquently just elucidated. And it is exciting to be able to, throw into the ring all that you've got, and I quite appreciate all the commentaries. Uh, well, very quickly, so I'm managing partner at African Tech Lab. I'm abbreviated as AIL. We're a research and consultancy interviewing platform, pulling all the stakeholders in the insurance and technology ecosystem with a view to accelerating digital transformation on the continent. Our focus is on the African insurance space, and we're passionately reverse engineering insurance inclusion on the continent via technology. We also like to see how there's a stimulation of both new and existing players that will shape, reshape, and unlock new value chains and markets in the insurance industry in Africa. And generally, our mantra is to keep promoting digital insurance and transformation. And having seen what the insurers on the call have quite clearly elucidated today, it's exciting to be here once again, and I look forward to a fruitful discussion. Thank you.
Thank you, Mr. Salonko. Okay, so let me start off with you because I think that this is an important thing. We know that the insurtechs face a lot of challenges, especially as startups trying to get on board into a bigger market space. And one of the key challenges we have seen around the operations of insurtechs, the bottlenecks around how they get onto the market and etc. Sometimes regulatory bottlenecks do not allow insurtechs to find space to operate in the insurance market. From your perspective, are these existential threats to insurtechs?
Okay. So thanks very much, Afis, for that question. I think it's a very delicate question that can be seen from different perspectives. Okay. Now, what do I mean by that? Now, in this whole ecosystem, what is key and critical is all the stakeholders being the insurers, the insurtechs, the regulators, the consumers, the investors, and enthusiasts that are just watching all have different lenses and different perspectives. Okay. Now, but what is pertinent at the end of the day is the central person around this, which is the consumer. Now, the purpose of regulation, just to highlight and touch what you have just said, is to protect consumer, is to protect the consumer, and is to make sure that all works according to what has been meted out, right? Now, but the interesting part of it is, the way we like to classify this is we define this as AD, right? Traditionally you have DC and AD, right? And so now we have a new nomenclature that we like to describe as ADBC and ADAC, which simply means ADBC before COVID and ADDC, I beg your pardon, ADAC after COVID, right? So after AD now, you're seeing the situation where you're having before COVID and after COVID, right? And this has just quite clearly happened between 2019, late 2019, and the latter part of 2021, which is a 2-year window grab. And the interesting bit about it is, speaking about the whole ecosystem, so many things have happened between just the space of 2 years, right? And so when you look at the regulatory landscape, to touch again on what you asked, there's been so many different approaches. There's been so many diverse approaches to making sure that the consumer needs are met, and at the same vein, that protection gap does not continue to widen on a global scale. Now, when we bring it to Africa, we're seeing different trends that are happening across the CIMA region and the Francophone side, and even in sub-Saharan Africa, where we are domiciled, right? Starting to see the kind of policies and innovations that are even coming into the regulatory space, where the regulators are beginning to, give a window of opportunity to have certain things happen. One of this is this program that has been birthed, right? I think the BC, let me classify it that way, we wouldn't have had, I very much doubt there would have been, this kind of programs that will be trying to nurture the ecosystem. Okay. So clearly what that says to us is that there's a shift that is beginning to occur. Now, it might take a bit of time, for those shifts to move gravitationally with the speed of lighting that the emerging technologies are moving with. But by and large, what is starting to happen is at least there is a change. And with that change comes the opportunity. Quite frankly speaking, technology will always go faster than regulation. Regulation always tries to play catch up. So the beauty of it is this is the time, this is the critical period that companies playing within this space, can start to push out products, test products, dart things at the wall, partner with insurance companies that already have all the licenses and everything in protocol so that they can create, a transformational product that meets the 21st century consumer demographics. In 2030, right, there's going to be a retirement of about 693 million baby boomers, according to a research done by Cushman and Wakefield. Now, who are baby boomers? They're people who were born just shortly after the Second World War. So typically, these will be people who are between the ages of 51 to 55 now. Now, by 2030, these people will fall between the ages of 60 to 63, right? Which means they'll be entering into the retirement age. Now, the interesting bit is, while that retirement is happening, you're going to have a debut and an absence of about 1.3 billion Gen Z workers, right? And these are people who are currently, between the ages of 11 and 16, right? So evidently, that is where the consumer market is shifting towards. And the way this group of people access their products and goods and services is not the same way it has been traditionally orchestrated to. So at this point, there is that mandate, right? That even whether you are an insurtech startup, whether you're a traditional insurer, whether you're an innovative insurer, you need to be looking in that direction. I'll stop there for now.
Absolutely. Okay. So key highlights, there is change. And so there is hope for all our cohorts. You need to build value propositions that insurance companies can get to be able to run around their projects and so on. Let me just state that I would like this conversation to be as participatory as possible. And so as we go along, if the cohorts have germane questions for our speakers, you can do that as we go along. Now, let me just move swiftly on to our insurers, to Mr. Alex Chumesi. Can you basically tell us, and I want us to look at it from the perspective of your value chain, from the point of product development, what kind of products are you looking forward to have going into the future? And then top line, how do you want to grow your top line? If you want to grow your top line, are you looking in the direction of innovators, insurtechs? If it is about your legacy system, are you looking around to form partnerships around that? If it is also about customer experience that you want to give to your client base, are you looking around partnerships? So I want you to have a conversation around this. Just tell us in very brief terms what it is that Star Life is doing with their portfolio. Thank you.
All right, thank you, Hafiz. Great to be here once again. I quickly have to thank you for the opportunity anyway. Hafiz, can you hear me?
Yes, we can hear you loud and clear.
Great.
Yes.
So Hafiz, one, I need to let us all know this, that when it comes to Star Life, for the past 4-5 years, we took a decision, and the decision was for us to get into partnership for really for growth, for the real growth on the ground. And if you take a close look at what we've done over the past between 7 and 8 years. We've had the highest number of partnerships when it comes to bank assurance. We currently have 22 banks for bank assurance. When it comes to the area of even sports, to the extent that we've entered into sports, and we are in partnership with the two greatest clubs in Ghana. That's Accra Hearts of Oak and Kumasi Asante Kotoko. Between these two clubs, we've been able to develop 4 main products, and which has actually aided these two clubs to come up with some good financial backing for House of Folks win last year. Can be attributed to the partnership we had with them, to the extent that we needed to support them with a bus to aid in their movements. And these for Kotoko, we, as part of the entire package, we needed to come up with the construction of help them with the construction of their training pitch, which is called the Adakojachi training pitch in Kumasi. Beside this, we have product lines that goes a long way. These product lines go a long way to help the support base build some commissions, monthly commissions, regular commissions for these two clubs, making them self-sufficient. Apart from the 22 banks, we have these are standalone products that had to be designed for these 22 banks. We have 4 universal banks, and the rest being banks within the rural setting and the savings and loans space. Now, beyond this, we also have what we call the fintech companies. I mean, the insurtech. Now, you can only catch the youth of these days where they play around. I mean, they are almost all the time out there on their phones. Technology is the order of the day. So the ideal place to get them will be on the fintech platform or the insurtech platform. So we currently have 2 of them, 2 fintech companies we are partnering with. We have 2 pharmaceutical companies we have partnership with. We have a funeral home, and for embedded products out there on the market with other institutions, we have close to about 8 of them. So it tells you a lot that we are in the era of partnering for the needed growth. And the beauty of it is that we go out of our way to provide all the needed support. The the human resource training, the financial support, the operational support, the area of technical know-how in terms of how to come out with product lines. We've had instances where these companies get to you and they do not have any inclination as to the kind of products they really want. But as a result of the kind of manpower support that is always provided, we are able to, in collaboration with them, come out with a very good and sellable products for the market. So we are looking at using the platform to do the selling, collaborating with us to also create other channels of distribution other than the usual and the conventional way of selling. So if you asked, these are some of the things we have done in the past to help our partners. And I guess we have done a lot more than what I've enumerated so far.
Wow, wow, wow. That's great. Thank you. Okay, in order not to sound repetitive, Mr. Taguna, can you tell us what Old Mutual presently is doing in terms of its portfolio that are related to innovations and etc. Thank you.
Thanks, Hafiz. So I think one of the things that we have really been doing over the last 3 years in particular is to look at very innovative ways of us selling and distributing insurance. For example, we were the very first to come up with WhatsApp insurance in this country. When we were selling our travel product, which is still selling, we've even added funeral product onto that WhatsApp platform. We've even added international travel onto that platform. That's just one of the many things that we are doing on the digital front, and I'm speaking mainly to digital because of the nature of the conversation that we are having today. I mean, that's so, and there we actually partnered with a startup company, which, you know, so that's one of the startups that we've partnered with. I think there have been about 3 or 4 that we've partnered with since I've actually been here myself. And I think for me, the most important thing have been the learnings that we have gotten from that. And the good thing about that is that one of the things that you quickly realize is that you actually need to have a different way of thinking and a different view, particularly when it comes to products. That they are digital native products are very different to the normal products that we're used to selling. You see, so one of the biggest challenges, one of the big issues that we have, for example, is or that we had, for example, was issues of product development. So when you find that traditionally products, even NIC, will require reams and reams and reams of actuarial reports and so on and so forth to talking about pricing, modeling, and all those things. So personally, I've done that in a past life, so I know what it's about. But in the reality is that when you're talking about a contract, because an insurance thing is basically a contract that lasts for 30 years, 40 years, 50 years. So you need to be sure that when you're entering into that contract, it makes sense. But usually the viewpoint that we have taken when it comes to digitally native products is to make them much shorter term, right? Such that you are able to learn a lot more, even changing in terms of, sorry to use jargon, the way in which we are actually implementing those products from a waterfall approach to an agile approach, where you are just bringing the products to the market. That has been tested. I mean, when it comes to people who can build products, we've got thousands and thousands of people who can build products within our space, without even exaggerating. That's the reality. But really what we look at is to get to a point where we get a minimum viable product, we take it out into the market, we test it, we get market feedback, we change. Because the reality with insurtech type businesses is that we don't know. We don't have the answers. We don't have all the answers. No one the world over is really cracked insurtech. So the problem is, if we want to believe that we know all the answers at the outset, we are lying to ourselves. So that's why even we reduce the duration of those products, and we try and make them as short term as possible, and try and implement the learnings as fast as possible. So you find that even the way we have adapted, like I'm saying, even the way in which we manage our product development process, our operational processes, to make them a lot sleeker and less manual intervention. We're using quite a bit of artificial intelligence to actually, particularly when it comes to data mining. So in terms of who are we targeting, when we get a partner, who are we targeting, how are we targeting, which customers are we looking at? It's not just a random blast to anybody, but you actually have done quite a bit of research, customer insights into the customer base that your partner has, and you're actually doing a lot more, using a lot more of artificial intelligence to figure some of these things out. And I think for me, the results that we have seen have actually been quite encouraging. If they had not been encouraging, we wouldn't be on this platform. And I'll go back to the statement that I made, that, you know, the reality is there are many ways to skin a cat. And at this point in time, we actually are looking for all sorts of alternative options and solutions in which we can reach customers. At the end of the day, our products are meant for customers. So our customer, when we look at partners and what kind of partners are attractive to us, for me, what was some of the key criteria that we look at basically is three-pronged. So what is the potential reach that we can get with the customer? How scalable is their technology, right? So because even some of it, we are looking at, you know, can I add more products? Can I even, at some point, extend jurisdiction beyond just Ghana itself? Is this something that, you know, that can be moved outside? So, and then the third one being, what is the target market for this kind of a product, this kind of a solution? So, you know, and how does that actually align with where we are actually trying to go as a group? So that's, I think, in a nutshell, that's basically what I would say.
Okay, thanks so much, Mr. Tavona. Let me just pick your thoughts again on the same issue. You talked about the learning experience is something that you pay attention to. Can you tell us, in some of these partnerships that you have had with InsurTechs, what has been the governance around the arrangements that you have formed with them? And per your view, does it work most of the times, or sometimes it fails? Thank you.
Look, I think the governance has been, if anything, Old Mutual will probably be accused of a little bit too much governance. But I think we have tried to be as flexible as possible. So usually we sign memorandums of understanding and so on, just the normal things. And the issue maybe is around how do you actually couch what is in scope and what is out of scope? Because like I'm saying, this thing is evolving. So as you discover certain things, say, for example, you say, we want to do this kind of a thing, and then you go into a partnership of sorts, in which case, well, it depends on the type of partnership. But if there's no equity involved, for example, that's one of the challenges that you face, right? So as the thing is evolving, let's say you start off, and it's the story of many digital firms, right? They start off selling one thing, and before you know it, the classic example being Amazon and them, right? Before you know it, they are in another thing. So as you are developing, does the partner keep charging you more? Is that part of the scope? Is that out of scope? And so on. Because really defining the scope, that is probably the biggest challenge that we have, defining the scope at the outset. You will define it, but that's one of the bigger challenges that you actually face. And I think it becomes a key thing where trust is actually important. And who, so for us, that is a very key thing. Who do we actually partner with? Who is the person behind the thing that we are doing, right? Because it's a partnership. Like any marriage, you don't want to get married to anybody. It doesn't matter what the potential of that person has. If that partnership is with someone who you can't trust, then it's not a partnership that's actually worth going into. So in terms of the governance, like I said, we would have normal governance around the take on, and then you would have what we also have is quite some significant project management around the product. So we have we set very clear milestones, very clear benefits. So we then, particularly when you finalize the product, take it to the market, benefit realization. We are looking at what is it that we had projected, what are we getting, why are we getting what we are getting, are we getting more, are we getting less? If we're getting more, even if we're getting more, we need to be very clear, why is it that we're getting more than what we actually expected, what more can we do? And those project management disciplines are probably one of the key aspects that make or break this kind of a thing, because when you have very clear targets, milestones, and review processes, it allows you to continue to get better and to move forward. But that's probably what I would say. And
Right.
again, I would say the scope is probably the most difficult aspect of this whole thing.
Okay. Thank you. Very insightful. Festus, I have seen your question. I would ask that after I engage Mr. Tunde. So, Mr. Tunde, can you tell us? I want to pick your thoughts around how, for example, insurtechs think about their engagement with insurers. Are they generally okay with the processes around which they are able to build partnerships and so on? Thank you.
Okay. Thanks a lot, Afeez. Right. I think there will always be, a tale of two different cities, if I can use that terminology, right? And the reason is because there's always going to be that disparity in the approach, right? Now, when we look at the different lenses from the different stakeholders, because that's the way I like to classify everyone. Everyone is a stakeholder in this. It's not like it's a competition between who is better, who knows it more, who knows it least, or anything like that. No, right? So when we look at the different stakeholders now, so an incumbent, right, is looking at, I want to be able to, let me borrow from the last speaker's his criteria. I want to be able to scale. I want to be able to, get more customers and get more innovative products through unconventional distribution channels to my end users, right? Now, he's also doing that while thinking, I don't want to be fined. I don't want to be penalized. I don't want to get into the wrong coffers of anything that falls outside regulation, okay? Now, on the other side, right, the startup is thinking, oh my goodness, you are not focusing on the things surrounding the product that is going to the end of the consumer, that is going to get to the consumer at the end of the day. Like, again, the 21st century consumer is the center of all this. And the way the mannerism, the marketplace, how they access products, financial products, let's even stick to financial product because we will leverage insurance as one of those categories, right? The way they leverage this on a daily basis has changed drastically just within the past 3 years. Okay, now this startup is thinking your customers are on Instagram, your customers are on Twitter, your customers are on LinkedIn. The insurer is thinking, what are you saying? Right? Yes, we know there are customers there, but those are not the people we want to target at this point. So it takes a lot of, convoluting and a lot of now seeing how there can be that sweet zone, that sweet spot in between that, number one, creates the products from the incumbent side such that there's no moral hazard, that they get onboarded onto the scheme and onto the policies, right? And let me give you a practical example. Just a little after AC, right, as we like to classify it after COVID, in Asia, there was several companies actually launched different platforms that provide access to basic health insurance coverages, right? And this was done by radically rethinking the product design and the customer engagement. Now, guess what? Within weeks, right, one of these platforms called Ant Financials by Xiang Hu attracted tens of millions of users just within weeks. And they have population advantage on their side, so just like we have in Africa, there are so many, you understand what I'm saying, right? And then this peaked to 100 million participants just within weeks. You can imagine that, okay? And what happened was of course, it was just a test model, but they had to start scaling it down gradually because of the moral hazard and people who were dumping and onboarding on the scheme, etc. Right? Which is one of the things that an insurer is going to be wary about quite rightfully in the first place. And so, from my own lenses, what I see and what we're beginning to see within the ecosystem is that it will always be that delicate balance, because at the end of the day, right, it has to be a win-win for both situations. And that's why you have very strong international companies, the likes of a company called Plug and Play, who we work with, right? They go very deliberate and heads-on collision to find that sweet spot as to which, okay, I'm a startup democratizing XYZ, and they merge directly with a corporate entity that is a traditional insurer, to create that sweet structure, because they will always come from the polar sides, from different polar sides. But the beauty of it is they are meant to attract. Okay, so continuously, what will continue to happen is that evolution, because one party is guided by regulation, the other party, if you look at the whole African landscape now, there's no clear-cut regulatory framework for the insurance technology companies, right? But there are certain countries, where the likes of the organizer of this program are putting things together. We're also involved with certain, regulators and countries that are doing this. So it's going to evolve over time, but you'll find out that as it even evolves and there's a framework, it can never be the same framework or the same policies as what the incumbent is facing. And so it's bearing in mind that both parties will always have their own different minds to avoid, so that they don't get penalized or fined. But I'll go back to my first comment, right? Innovation will always precede regulation, right? Regulation is always playing catch up. But at the end of the day, it's about the consumer, right? How do you get that product, unconventionally across the consumer? And if it's not, and here's the thing, if it is not done by the industry, somebody's going to come from outside the industry and cause major disruptions. So it's just inevitable. It's something we have to adopt. I'll stop there for now.
Right. Thank you. Very useful insights. Okay, so Festus has a question, and that question is targeted to Mr. Tavuna and then Mr. Alex. He wants to know, at what stage of the startup development do the insurance companies like to partner with insurtechs? At what stage of the development of an insurtech would an insurance company be more willing to partner with an insurtech? If I can get Mr. Alex.
Please. Is this Alex?
Yes, please.
We would have loved to have everything done with, but for the sake of these startups and for the fact that we need to also grow with them and help them get to the level where we'll all be winners. For us, it can be from ground zero, which we have done here in Ghana. We picked some of them from ground zero and grew them to the level, an appreciable level where we got into this partnership with. So it does not really matter. We need to also be concerned with their growth. In no time, they will become self-sufficient and all equally provide some level of employment out there for people. So right. we should be looking at the bigger picture.
Right. Mr. Tavona, do you have
Yeah,
insight?
I think our start point will be a bit higher than that. I think the bottom line is you must have, the reality is that we may have very good intentions and some people may have good intentions, but the reality is there are some people who have heard there's good quick money in fintechs and insurtechs, right? So they just want to come in, make a quick buck and leave, which is fine. It's a model. We have no problem with that. But what we look at is the long-term nature of what this insurtech is trying to do. So at a basic level, we have dealt with a number of companies at different levels. But for me, or for us, basically, you must have something beyond an idea. You must have some kind of prototype, if possible, some customers and so on. But at the very, 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 very least, some kind of prototype and some kind of because if we work with everyone who has an idea, to be very honest, you get approached by a lot of people who have ideas. But once someone has a prototype, someone has better still if they've actually built some customer base of some sort, even if it's 100 customers, it shows that there is some commitment and some level of dedication to what these people are actually trying to do, because it will take a lot of time and effort on our part, because it's not like we go into a partnership and then we just leave you and then whatever. We work a lot with them to help them to grow and to help them to develop. So at least we just need to be sure that there is that level of commitment on the side of the partner that we want to go into before we actually start anything.
Right. Two perspectives here, and I believe our cohorts have taken notes. Nana Harrison, Esofil, you have some questions. Can you make it just two? Please ask your question. Yes.
Okay, thanks, Hafiz. So, okay, I'll make it two. So the first one is to Tunde. Now, Tunde talked about, regulation or putting regulation for insurtechs to give consumers, to protect the consumer. Now, I'm thinking to myself, what is it that you are regulating? Because you could have, well, insurance companies are regulated by the regulator to build products. The insurtech are only enablers, okay? And you can have an insurer who can go anywhere and get an off-the-shelf product and roll it out. So question is, what are you regulating? Because if an insurer goes to buy, say, off-the-shelf product, and roll it out, that you can regulate. So what are you regulating?
Okay, no, thanks for your. Okay, sorry.
Okay. So, Tunde, I just wanted to be very sure you get the question before.
Yeah, I did. So, no, I'm not sure. I'm not sure that whether that question should be directed at me, to be quite honest.
Exactly.
I don't want to ask Hafiz.
Yeah. So
No,
maybe I'll wear my.
No, it's fine. It's fine. Let me answer, because I made a comment.
Yeah.
And not what's the word? A policy. It's a comment, right?
Right.
Now, let me come from this perspective, okay? Whether you like it or not, here's the thing. There is always going to be regulation. That's not something that was, constructed by single individuals or entities. There's always going to be regulation, right? Now, my comment was to saying that innovation will always go ahead of regulation. Okay, and so let me maybe paraphrase again. And that has always happened in all fields and all industries. Now, for InsurTech, what is currently going on is there are certain innovations that are coming into the space that, whether we all on this call like it or not, are beginning to see and say, hey, this is fantastic, right? The regulatory bodies whom I have no active participation with or have any stakes with, always come forward to say, okay, so we see this is going to work, but it has to be regulated. Now, our own lenses and what we see is, because we interface with a lot of, different regulators in different capacities, is to say, hey guys, yes, we understand what you're saying, but you can't regulate consumer behavior. Let me give you a practical example. Now, in the fintech space, you're beginning to see where you have financial services being picked up by the average user who doesn't have a bank account, by working to an agent, paying his electricity bills, paying all sorts of bills, sending money to a more suburban or a rural area for people to access finances. And take, for example, in some places in Africa, that is not allowed. That is regulation, unfortunately. In Nigeria, to be specific, just a few days ago, MTN, the biggest telecommunications company, was just given a notch, to be able to transact certain financial services and have a PSB service license back, which is something that should have been done tons and tons of years ago, in my own perspective and opinion. But unfortunately, that's just the way it is. And whether we like it or not, the regulator will always come to say, okay, so we see this are going on. We've seen a lot of cyber fraud activities. We're seeing a lot of different things. How do we even know that this company is not a scam? This company is not just going to defraud people and take off, which are actually valid points, right? But our own perspective, in this instance, is to say, hey guys, yes, we know you have valid points, but let's not stifle, let's not kill, innovation. Otherwise, these things can readily happen, even right in neighboring countries, without you even knowing exactly what is going on. They will get funding from international VCs and expand into international waters in Latin America and Southeast Asia, and impact lives, make loads and tons of money. Why should we be losing out on that opportunity in Africa? That is my own role, right? And that's my own lenses. Not that, hey, let's regulate it. My comment was to say, it's happening, right? And we've been privileged to be in a lot of meetings and fora and public sector workshops regarding this. And this is what we keep saying. I'll say it anywhere, I'll say it openly. It's just giving a very permissible environment for innovation to work, not to stifle it. And I stand on that. That remains my own ground. Thank you.
Right. Okay, so your next question?
Yes, my next question is to Mr. Tavoda. Now, he talked about, trust, in terms of who they partner with. Now, I'm thinking to myself, what you probably would find is that as with entrepreneurship and things like this, you normally would have maybe two founders or a single founder, So is that sort of like a bar? What are you, in terms of the partnership that you're talking about and the trust, what are you looking at? So if a company comes to you, they have innovated something, they've built something at the back of Festo's question, but it's a single founder. They are not like the big boys. Is that sort of like a bar for you not to work with them?
No, I think that's a very simple question to answer. It's not about how many people are in the institution. It's about that individual, right? So if it's Hafiz, what kind of a person is Hafiz? So some of it, and that's really all that there is to it. And you never get it 100% right, but the reality is that it's a relationship.
Yeah.
And if the relationship is to go forward, because me personally, I don't like to waste time, right? So if the relationship is to go forward, I just need to be sure about the character and the integrity of the person that I'm dealing with. So we have dealt with, the reality, a lot of insurtechs have got one founder. So they are really one founder businesses. Some of them have build some scale, but a lot of them even use third parties to what? To build some of their technologies.
Yeah.
That's okay. But I mean, you obviously just do a few background checks around the person and see who is this person. And if the person is reasonably okay, then that's fine, and you proceed. But it's not. I think just to reiterate, it's not about the size of the thing. It's about the integrity of who you're actually dealing with, and that's what it boils down to. Similarly, to the same way that in InsurTech, the reason you come to a certain institution is because you know that they are not going to steal your idea, for example.
Yeah.
Right. If you, well, there are certain individuals in certain institutions who you would be iffy about going with your thing because you know that by the time you are out of the door, they've started developing that thing and so on and so forth. So it works both ways.
Very
So
true.
in a very similar way in which you are concerned, we would also be concerned. And
Right.
maybe if I can just add to the regulation piece, one of the things that makes InsurTech, in my experience, a bit complex is that the products can become borderline.
Mm.
So it can become borderline banking, borderline health insurance, borderline this, borderline. As you get insights from people, we also want this. We also want that. And I suppose that's where sometimes you get what? It gets a bit complicated and challenging. And once it's small, you don't get a lot of noise from the NIC and all those people. The moment you start getting some kind of scale, then the questions will start coming. Like, this product, it was licensed as a funeral product, but now it is this, now it is that, now it is. It's a very interesting and very complicated way of, particularly when they are doing their job, which is to protect customers and to maintain confidence in the industry. Because if people don't have confidence, they don't buy.
Yeah.
But within InsurTech, for me, that's what I found, that the boundaries become very blurred between different kind of financial services products, and before you know it, you can find yourself trading in waters that maybe you don't even have a license for.
Right.
Okay.
Right.
All right. Thank you.
Yeah. So Nana, I would pick Kwame to speak later on if you can come back with another question. So Kwame, can you limit it to just 2 questions? Kwame Kumi
Okay.
Chumesi. Yes. Yeah.
Yeah. Okay. First of all, I would like to appreciate our panelists for the great discussion that we've had so far. So my first question is to Alex and then Tavona. Okay. So I would like to know, what is the perspective of the insurer concerning an insurtech firm? Do you see our services as complementary to what you do, or you see us as new entrants in the ecosystem that can disrupt your business? So I would like to know the perspective of the insurer concerning us as insurtech firms. Also, I also want to find out what are some of the pain points of insurers that you are looking forward to for insurtech firms to solve. And in developing a product, should we focus on facilitating on or improving the experience with which customers buy insurance, or we should focus on facilitating the underwriting process for insurers? So should we be customer focused, or we should be insurer focused in developing our product? So those are the 2 questions that I would want to ask Alex and then Tavona. And then lastly, this one is linked to the second question that I'm asking Alex.
Okay, so I thought you said
Tavona, but yeah, it's linked. It's linked. So let me just reconcile it. Yeah, so this one is to Tunde. Tunde, when you were speaking, I realized that you studied trends in the space. Okay, you've studied trends in the insurtech space and also in the insurance space in the sub-region. So in linking my second question with this third one, I would also want to know from your research and from what you've studied so far, what are some of the problems in the space that insurtech firms should be focusing on solving? The reason why I'm asking this is that more often than not, as insurtech firms, we can come up with solutions that are not so much needed in the space. So what are some of the solutions that what are some of the problems that we should be solving as insurtech firms? Thank you very much.
Okay, thank you, Kwame. Tavona, can you address the question before I go to Alex?
Okay, I think thanks for the questions.
And sorry for making you very busy.
Yeah. So I think when it comes to what are we looking for in terms of the solution that we are looking at, for me personally, what I'm looking for is distribution. I'm looking for something that allows me to target a large number of customers in a way that is convenient to them and offering them something that they value. Right. I'll go back. The example again that I always give my people is that personally, I don't have a mobile money account. Why? Because I think the charges are too much. If a bank was to charge the level of charges that a mobile money provider charges, there would be a public outcry, and people would say that they are working against financial inclusion by charging 1% withdrawal, 1% deposit, 1% this, 1% that, right? So I do mobile money transfers, but mainly from my bank, what do you call my bank wallet. But the reality is that, so the reason I do the transfers is because I'm not trying to fight it, right? I know the value of it. I know the convenience of it. So that is the one word, the convenience, right? Because the reality is that the people who really use these products are mainly people who people would traditionally have called financially excluded. And we were saying that they were financially excluded because of fees. But they are paying these fees. Why? Because the issue was actually not fees. The issue was the product and the commodity that we were selling. How convenient was it? How much of a need was it meeting? The moment it met that, people were willing to pay. And they are what? And they are paying. They will not open a bank account that will cost them way less than this. Why? Because they will need to walk to a bank branch. They will need to do this. They will need to do that. That they what? That they couldn't do. So for me, when I look at things, that's the lens with which I look at. We've got various things that we are doing from an internal perspective in terms of automating underwriting, automating bank reconciliations, lots of robotics that we have put in place and are putting in place to reduce and to make things much faster and easier. But primarily, so we do look at those because I mean it's the way the world is moving, and we have, like I'm saying, we've done certain of those. But if you come to me with that solution, I'll give you attention. If you come to me with a solution that is talking distribution, I'll give you lots more attention. So it's about how much attention are you going to get from me. You will get a lot more attention if you're talking distribution than if you're talking internal processes. I want something that goes to the customer. Thank you.
So Tavona is very clear. He's talking about distribution. So that is it. Alex, any views?
Right, Hafiz, thank you very much for the question. Kwame, what I will quickly have to add to what my big man said is about one, looking at the operational costs. Now, we are all in business to make some gains. So if I can distribute efficiently, I would like to go for it. So just as he said, we'll go for what is it? InsurTech, because of the fact that it opens us up to the untapped market. And this untapped market is one area that is fast growing, and you only have to catch them young. And most of the youth are within this space. So you always want to take advantage of that and also reduce your cost as much as possible. If I can have a blend of the two, distributing it and making sure that
sorry, looks like we've lost
your cost is relatively down. Now, sorry, am I?
Yeah, so we can hear you now.
Approach and the operational bit, which is the insurer focused area. The insurance focused area, because we relatively want to reduce our cost of operation. I mean, the truth of the matter is that you cannot afford to lose a client. And if you gain any client or win any client, you do everything to keep this client for good. So keep the client, milk that client for a longer period, and make the needed gains. So it's a blend of what the insurer focus and the customer centric approach.
Great.
Thank you.
Okay, so thank you so much, Kwame. So Kwame's third question was to Mr. Tunde. Please, can you address the question?
No issues, man. No issues. So Kwame, I mean, it's good you're you're asking questions that touch the hearts. Let me put it that way, right? And the interesting bit about it is, I think Mr. Tobona was talking earlier about how products that they were creating were not fitting the end user, which is what we typically would describe as a product consumer misfit, right? Because everybody talks about market product fit all the time. You must use it to generate your MVP before you know that, okay, the customer. But the truth of the matter is, more often than not, in the reality and practicality of it, it's not like that, right? Now, so when you look at the economic trends, which seems to be your question that you're asking, right? You want to start to look at areas that are trending, particularly in the space of things like the secular sharing economy, where the end user doesn't want the products to go to waste, right? And this is very common. That's why you have the concept of co-working, co-sharing, co-living, and all those things happening amongst, the evolving and emerging workforce and the generations that are coming, Y, Z, millennials, alpha, or anyhow you choose to describe them, right? Because again, that is the market, and that's where the market is shifting to. Okay, you're also seeing things that have to do with the pay per use or pay per usage situations, right? So very, very clearly in the space of auto insurance, where you have the concept of telematics, people getting the tendency to pay to insure their vehicles only when they drive them, right? And so there are certain companies. Matter of fact, there's someone who just raised 1.5 million USD. Happened earlier last week, but they just made the announcement today, right? And is within this particular sector. You understand? And what the concept is really just about, you don't need to pay for a comprehensive 1 year, 12 months upfront, and maybe out of those 12 months, you drive the car for maybe just 6 months. So what happens to the remaining part of the 6 months, right? It means that you have potentially, to the eye of the consumer, not in the real sense, right? Because there's all agree that we're all insurance experts here, but to the eye of the consumer, he has wasted 6 months' money, right? And so you're beginning to see those pay-per-usage systems pop up. Also, the concepts of personalization and hyper-personalization, wherein I only pay for the things that I am predisposed to per time. Meaning that, so for instance, look, if we talk about health now and insurance, if I know that in the past 4 to 5 years, tendencies are that these are the basic primary illnesses that I'm exposed to, right? If I'm going to take an insurance cover, I should be taking for those things that I'm predisposed to, not for the things that I have not planned for, even though those things might show up, right? But when you look at the risk premium, equilibrium, there will always be a shift. The consumer will always focus on the premium and not look at the risk. So things like that, asset sharing, collaborative ecosystems, agile systems. The trends were, I mean, in most sub-Saharan African countries now. Okay, so in the East, East of Africa, it's been, M-Pesa has made tremendous strides, but coming towards the West, right, where we were domiciled, we're starting to see where, mobile agents, mobile money is also keying into the distribution channel and the ecosystem of people taking up insurance services. So trends like that economically are the things that are unfolding. Whereas, as you continue to build, when you look at the kind of emerging technologies, the areas of telematics, machine learning, specifically for data, monitoring and managing consumer behavioral economics, right? Which is where data science and heavy data analytics comes in. A lot of what we call augmented underwriting and all sorts of new technologies are emerging. So it's a fusion of both sides, this emerging techs and this emerging economic trends that you just have to zoom your lenses in, to be able to unlock new value chains. Thank you.
Thank you, Tunde. Okay, so Newton has two quick questions to Mr. Tavuna and then Mr. Charles. Alex, sorry. He said he wants to know whether both Star Life and Old Mutual have formed any partnerships with InsurTechs which are outside Ghana, and then also he wants to know if there is a possibility for that to happen in the future.
For us, yes to both.
Sorry, I missed that.
I said for us, yes to both. And
Okay.
perhaps a question that we hadn't answered for Kwame was around whether we view InsurTechs as competitors or as people who can help us. I think it's a bit of both. Okay. Just like you find that for our group life solutions, there are things that we will do co-insurance with Star Life. So we are collaborators and competitors at the same time. At the same time, it doesn't change. It doesn't change anything. I think as long as you're clear about where you are collaborators and where you are competitors, it's fine.
Right.
But in terms of Newton's question, the answer to both questions is yes.
It's yes. Okay. Can Mr. Alex also give his perspective to this question?
Yes, we have a local local partners. For foreign partners, we are yet to seal one. It's in the process anyway. We've gone very far with it.
Okay, so what it means is that you are open to
oh, absolutely. Absolutely.
Okay. Let me change here slightly. And these questions are targeted to both Mr. Tavuna and then Mr. Alex. At this stage, we have done discussions around what it is that you are looking to have to be able to interest you to want to form partnership with InsurTechs. These cohorts have a lot of solutions. These solutions cut across a lot of areas, but specifically when Tavuna spoke, it was very clear that you want it to be in line with distribution because you want to grow your top line, you want to grow your market share, and so on. If the cohorts were to present solutions around this, are you happy to form partnerships?
Very happy. Very happy.
Very happy. This is exciting. He says he's very happy too. Very happy. Absolutely. Alex too says very, very happy. And so what it means is that there is a convergence. Insurance companies wants to engage, but the most critical thing is that you must develop solutions that would support their propositions, and then you'll be able to build partnerships. If we have questions at this stage, we can ask. Like I said earlier on, I want it to be as participatory as possible. Just 3 or 4 of us have spoken. By the powers vested in me as the moderator of the program, I would call on each person I see his name. Doreen Asampana. Ebisa, do you have questions for any of our our speakers, whether Mr. Tavuna, Mr. Alex, or Mr. Tundi. Do you have specific questions for them?
Yes, so I would be interested to know from your experience in the past, what is the most difficult thing for an insurer in working with an insurtech? What are things that we should, kind of the pitfalls that we should be aware of and try to avoid?
And this question is directed to who, please?
I think, well, any of them that where anything comes to mind, but otherwise, Mr. Alex, maybe.
Okay. Mr. Alex, Doreen wants to engage you.
That's a tough one. She wants me to come out with something. Mr. Tavona mentioned a few of them, but seriously, the most difficult bit has to do with you not really not believing in yourself and not knowing what you are up to. Has been really tough for us. You should know what your objective is, what you are entering into, and at least have a fair idea of what you want to get into.
Right, right. Any specific question from my cohorts?
Yes,
Okay.
I do.
Sorry, if I can just add to that. The other thing similar to what Alex has just spoken to, I think that also is sometimes insurtechs overselling themselves. And then you get into something and then you realize that, there was a bit too much overselling that actually took place, and projects then end up taking a lot longer than you.
Right, right.
Yeah, that's useful. Thank you.
Okay, all right. Atu Kwamina, kindly ask your questions, please.
All right. Thanks for the opportunity. I think my question is directed to, I think anyone at all, but mostly to Mr. Tavona. So we work with farmers. Our expertise isn't in understanding insurance products. I know, I think we all know smallholder farmers are, these are marginalized groups of people. They don't have access to, they don't even have access to credits to expand their farm activities. They don't have access to any sort of insurance product at all. And through this accelerator, we've been able to forge partnerships with a few insurance companies. And basically what we are doing is we are reselling their products. But another thing that came up with our discussion with farmers, they want life insurance products. And so my startup, like I stated before, we have no one who has, been in the insurance space before. And it's really, really tough to design a product. So can I, for one, just walk to Old Mutual's office and be like, we have the reach. We are able to reach the farmers. You spoke about distribution. We have distribution. Can we together craft a product for our farmers?
Once you have that reach, once you are able to reach the customer and you are willing, you come to us. You do your best. You do your thing. We do our thing. That's what a partnership is about, isn't it? Your expertise is getting to the customers. Then we come in and we look at what are the customer needs and how can we meet those customers. So
okay.
you can arrange the time. You come in. Let's talk.
Right.
Right, sure. So then I think I'll take your number or your contact after this call. Yeah,
You
so
can.
Okay.
Okay. Right.
I'll put it in the chat.
All right, sure. Thanks. Sir.
Wow, very exciting. So Newton, your hand is up. You have another question?
Yes, I do. Hello?
Right. We can hear you.
Yes. Okay. My question is directed to Dr. Tunde. At least he's my mentor. Anyway, indirectly he's doing a lot, and I'll be following him for over like close to 2 years now. So I know his capacity when it comes to research based on the insurtech space in Africa. But I want him to actually give us some sniper about the francophone market, because when we are talking about InsurTech, the francophone market is a little bit very dormant, and that is basically where I am looking at. And I want him to give his perspective if actually there's a niche in that francophone market, or there's still a lot to be done when it comes to regulations and so on.
Okay. All right, Newton, it's good to hear from you again. I trust you're doing well. Super. So let me paraphrase what you said. Did you say the francophone market? Is that what you said?
Yes, I said the francophone market, talking about like
Okay.
the CEMAC, the CEMAC
Awesome.
zone.
Awesome. Yeah, gotcha. Okay, so as you know, I mean, like the beauty of this also the people have different lenses. Again, it's different perspectives and different lenses as to how the whole of Africa is viewed, right? And should I say, fortunately or unfortunately, sometimes people who are more knowledgeable, especially from the outside perspective, like to classify it as francophone and anglophone, right? Some people classify it as North and then Sub-Saharan, while some people from the outside just believe it's one country, So, but looking at the nomenclature of francophone and anglophone, the beauty of it is when it comes to insurance-wise, as you know, francophone is maintained by the CIMA regulatory body, and because of the way the clusters are of the different countries that constitutes this, it cuts across the CIMA regulation, cuts across 14 countries. And what essentially happens is what is good for the goose in one particular one gets scaled across the remaining 13, right? So that is a very value-added advantage for that side of the market. And I'll give a practical example. I mean, there's a guy who, as funny enough, he's reverse engineering it. He's trying to come into the sub-Saharan, but started from the Francophone region. That's a guy called Oko. His name is Simon, right? And he actually does insurance for smallholder farmers, and coincidentally, just similar to what the last person was talking about, right? And what this guy has been able to do is, partner with heavy lifters and heavyweight insurance companies, scale his product through those partnerships, and then essentially, because these heavy lifters or these heavyweight guys are domiciled in predominantly the whole of the region, by default, his product is able to permeate across the region, right? Which is a very fast way to scale, because again, as a startup company, you want to transit into being a scale up, and obviously there are metrics that are tied to the kind of funding that you receive if you're looking at going the VC route, or if you're even looking at going through the debt financing routes to raise money for your business. There are obviously different metrics that you have to achieve per time. Okay, so if you're looking at that CIMA region, my recommendation would be try as much as possible to, number one, look for the person in sync with your area of your product, whether it's auto, that will be telematics, whether it's what's it called, agriculture, whether it's P&C, whether it's life. You need to identify that person, who is a heavyweight in that region, and then to, open the lines of conversation and try to see how you can talk, to that person, and start it as a pilot. Don't start. I think the mistake that most insurtech startups make is, okay, they want to lock down certain things, and in the beginning they're already talking about exclusivity. Most times, no traditional insurer wants to do that. If you go and you say, look, give me a pilot, let me do this for 6 months or 12 months or so. If it doesn't work, hey, we go our separate ways. But if it works, then we can come back to the table and we can expand focus. Then that works. At the point where you feel you want to have that conversation, there's a guy who also works with us. So he works with us strategically because of that CIMA region. His name is John Stefan. I think you might have met him, right? But at the point where you're ready, hey, just give me a shout. I'll make an introduction to him. And, he can help you point and navigate a handshake with one of those guys who is a heavyweight on that side of the fence, But yeah, I hope that makes sense. That's what I can say for now.
Great. Thank you.
Thank you
Dr.
very much.
Kunle. Thank you.
No worries, man.
Yeah. Atu Kwamina, do you still have a question? Your hand is still up. Okay. So I think you don't have a question. Okay. Thank you very much. I think Dr. Tunde brings the perspective that as insurtechs we should be learning a lot from. Aside the fact that we want to have partnerships, the kind of experience that you must have to be able to guide that is very, very important. And we are so excited to have him on this call as one of the key speakers. Let me move back to the insurance firms, Mr. Tavuna and then Mr. Alex. We have heard you raised a number of things that you want to do and things you want to do, which is very exciting. Mr. Tavuna was very blunt about some issues that he needs to really see in order to engage an insurtech. I want you to tell us, beyond the discussions we have had, where does your company, in terms of the future, where are you looking to harness? And is innovation a key driver around these thoughts? You are still muted.
Yes, Hafiz. Just as Peter Drucker said in his strategic, management book, it says you either innovate or you die.
Right.
And we are not ready to die. We want to make some giant strides into the future. So obviously we will need the insurtech to partner with to make these moves. We have this ambition of taking taking up the second position in terms of market share within the industry in the next 2 years. So, I mean, with the help of the insurtech platforms, I mean, we'll be able to get to that position, and that's what we are striving at achieving.
Right. Thank you, Mr. Tavona.
I'm glad Mr. Alex is acknowledging that the number one in the next 2 years will be taken.
so that's very exciting. We have two competitors on this platform.
I love that.
But I think for us, I mean, it's very similar. There wouldn't be much difference. What, even when you look at Old Mutual as an international brand, what we've actually done is we have created a very different and very separate unit that we are calling New Growth and Innovation. That is a different CEO, a different board. The board actually has only 3 people on it and very different governance structures that allow us to be able to tap into these kind of initiatives without actually a lot of the bureaucracy that you probably find in an organization like ours. So that decision making is faster. Even when you're looking at an insurtech, you're actually looking at it the same way that venture capital firms would actually be looking at it, and so on and so forth, if you're actually looking to get equity. So it's something we are serious about, and it's not something that you come in and you are just paying lip service. The reality is, even if you look at ourselves and where we are, we have ambitions to be right up there, at number one at some point. So, and we are not going to do it by increasing the number of foot soldiers on the streets. That I'm very clear about. I'm not going to increase the number of foot soldiers on the street. So insurtech then just becomes a necessary thing for me.
Right. Wow, very exciting. So Dr. Tunde, I'd like to pick your thoughts. You've done a number of I would call it learning experience from the insurtech's perspective. What advice do you have for these cohorts in building their portfolio and etc.? What advice do you have for them?
Okay, thanks, Hafiz. I think that's a very succinct question. Reason why I say so is because it's important to look at look at it from, let me not say tunnel vision, right? But from a very long-term, impactful, transformational perspective, right? Because you're taking what, you know, the group of companies that fall into this category is essentially doing is taking policies that were formed as far back as post-Second World War, breaking them down, and then causing major disruptions, right? And so for me, the first thing that I think is very critical is getting your story right, right? Now, it is not unusual, right? And I don't think it should be scary for anyone on this call to reiterate, readjust until they get to that particular point where they know that, boom, I have this solid MVP, right? I think there's a lot of, personally, I think there's a lot of exaggeration on, oh, yes, you must hit MVP. Don't focus on the numbers. I will say focus on getting your story right. And a sub-element to getting your story right is your product, right? In 30 seconds, the ability to be able to confirm or transfer to another person who is a layman that doesn't even understand insurance, and you can convey your message clearly and articulately to say, this is what we do, that will go a long way. Now, the time that you're going to use to get your story right, versus the time you're going to use to raise funds or chase partnerships and everything. Once you get that part foundation, I'm telling you, it works like magic. Everything starts to fall into place because you just find out that you're just, hitting the right, you make an application, boom. Instead of you sending those follow-up emails to say, we have not heard from you, they are the ones going to be reaching out to you to say, how far can you join us on this, and it just changes your whole narrative and your trajectory holistically. So if you can just dedicate specific timing to getting your story right, it can be tasking, it can be painful. You might need to reiterate, several times, 1, 2, 3 times. Don't reiterate too much, by the way, but just get that story right. First things first. That's number one. And then the second thing I will say is whatever you want to do in terms of, because you want to transition from a startup to a scale up as quickly as possible, not because you're using the other person's clock to determine your own clock work, but because the more time you waste, somebody's going to come and do exactly what you're trying to do. That's simply so you're in competition with yourself and nobody else, right? And so as you do that transition from the startup to the scale up, you need to quickly decide upfront what exactly is your financial strategy, because I think those are the two critical things that distract and disturb most founders. I wear a founder hat as well, right? So I'm speaking from a pain point, right? Where you start thinking about, okay, so this is my story, and then the next thing you're trying to figure out, what is my financial strategy? If you know that you want to have VC funding, be deliberate about it upfront. Quickly discuss with your advisory board, your co-founders, whatever it is, and start executing on that. Have someone, if you can, by the way, I think this links into what someone was talking about, co-founder earlier on. The most important thing about having a co-founder is where you are lagging or where you're weak, you have someone to compensate. And so even if you don't have co-founder or whatever it is, if you have a structure, if you're a team of 3 or 4, it doesn't matter, and you say, I'm going to be responsible for the daily operations, you'll be responsible for looking out for the opportunities and how we're going to attract and pull these funds, then things move quickly faster. But critically, I'll say it again, you need to describe, because there are different strategies, right? And more often than not, you see some firms who are able to clock the different strategies, but try not to do the jack of all trade with those strategies. And okay, so let me just summarize those strategies. Either you're using debt financing to grow your business, or you're using VC funding, or you're bootstrapping, or essentially you're growing as an impact fund, an impact-driven organization looking for impact funds. Please don't try to mix it up to say, okay, because I think I fall into the different areas, I can do the 4 at once, right? There are different principles that apply to the different 4 different channels. And the earlier you get that right, and you know that this is exactly what I am going to gun for, this is going to be my strategy. Even if you fail at it, you can quickly start and shift to the pivot to the next strategy. But get your story right, number 1. Number 2, get your strategy in terms of fundraising right. And all the problems will seemingly disappear. You just keep, growing at the end of the day. That's what I'll say. Thanks.
Wow. Thank you so much, Dr. Tunde. Okay, Elias of FSD wants to share his thoughts. Elias, Nana, I'll come back to you. Elias, can you can speak, please?
I think Nana can go first because he raised the hand earlier, so maybe I'll just come after him.
Okay. So Nana, you can ask your question. Yeah.
Oh, thanks, Elias. So 2 questions quickly to the insurance companies, Alex and Mr. Tavona. It's gratifying to hear about what the future holds. Now, back to the product. Are you sort of looking at sort of an off-the-shelf product which has already been built that you're looking to sort of like pick and run, sort of a plug and play, or you are actually looking to sort of work with these with us as the cohorts to sort of build and customize to your needs or the products that you've already been approved to sell? That's the first one.
Well, we are looking at both. Looking at the standalone, the existing products, and we coming together to also develop new products just for some niche markets within your area of interest.
I think for us it's very similar. I mean, it depends on, firstly, the kind of partner that you are coming up with. If it's an insurtech, usually they will have some products that they have. Sometimes it's not so much a direct insurtech, in which case you need to develop the products. But at the end of the day, what you always need to realize is that customers are different, and different insurtechs target different types of customers, and by type that can mean different age profile, different salary profile, different gender, all sorts of things. So at the end of the day, a product, the reality is that in insurance, particularly life insurance, there are very few products, right? What usually differs are the ribbons that you put around the products. But really, what is the underlying product is either a savings or is paying on the event of a death or a disability, or in some cases a sickness. That's it. All the other things, they are bells and whistles that you're just adding based on what the customers actually want in that target market. But otherwise, we repackage a lot of the products. This is what we all do. I mean, even if for example, I would assume, I don't know for a fact, if I'm to take Star Life's products, the Phobia, Sure, and the one for Asante Kotoko, they are probably very, very similar, but they've been packaged what? You put different ribbons on them to attract different people, which is a go-to-market strategy, really. That's what we all do.
Right. Okay.
Right.
Thank you. Thank you. Okay, so Elias, you can speak now.
Yeah, so I've liked the discussion, and ideally, when we talk about partnerships, and maybe what we just need to think about is how then do we balance business requirement of the value chain around partners, and ideally, what really comes in for is that there is need to just kind of think about the actors in this particular value chain. You know, there is a client, which is a policyholder. There is an insurer who is basically looking into providing the product, and also there is in this case there are different partners that would really want to support that particular value chain. So what basically lacks is a balance, and ideally when that comes into fore, then what basically you need to think about is then how then do we create the balance? How do we create the balance? How do we create the balance? That's the biggest challenge that you need to think about. So let us just take this as an example. So assume that you are here and all of us here are trying to really solve one challenge that is affecting Africa. And I would want to tell you is that, look, we are trying to reduce the protection gap. And with that, then we need to have risk mechanisms to help the people that we are providing a service to reduce that protection gap. So the biggest thing is the balance, because, for instance, Tavona wants, for instance, which would want a particular partner that will be able to provide a particular scope, and this particular scope must meet the requirements that will enhance that particular partnership. At the same time, the client will not be left out. In this case, the policyholder, he will be part and parcel of that particular partnership. So in one or the other, he will be affected by the requirements of that particular partnership. So also think about the other partners. So in this particular case, then who comes in place? It's an insurtech. So think about client who is a policyholder, think about an insurer who is a risk carrier, then think about an insurtech that has come up with something interesting, though maybe a product or a solution. So the product basically sits at the center. Now, the biggest component that then really looks into attacking that partnership is how then do you create the balance, because all these particular three areas are pulling towards a particular benefit. So for instance, the client is interested to get a particular benefit out of this arrangement that is in place. So in this case, the policyholder wants to get a particular benefit, the insurer wants to get a particular benefit, the insurtech wants to get a particular benefit. So all these particular things are pulling towards your own interest. Now, what basically brings these together is the product, is the insurance product, or the insurance, or maybe the insurance service that the three components I've created. So in this case, then what we need to think about is how then do we create that balance? So I want to give you just 5 pointers of the product that creates a balance within a clear partnership arrangement. So the first thing that we must think about is simplicity. The insurance solution must be simple for the participants to handle and understand. Now, if you are creating your solution, will the policyholders, will the beneficiaries, will the delivery channels, will the insurers be able to experience as fewer hurdles as possible in terms of how they access it, in terms of how they distribute it, in terms of how they understand it, in terms of how they explain it, and also into how they administer the product. So simplicity is a very clear item that will be able to drive your partnership. Most of the time, we think as partners in a particular arrangement that the level of complexity around your solution will keep you tied to your partnership agreement. And most of the time we think that, okay, fine, I want to make this as complex as possible so that the insurer will never think about going to any other person or even think about dropping me out of this particular arrangement. Now, that particular confusion will even go to the policyholders, to the beneficiaries, to the distribution channels, to the insurers. So it kind of kills the partnership at the end of the day. So simplicity is key. So write somewhere S, because I want us to go through this journey. Then the next component that we need to think about to create the balance is understanding. So is your solution or your product, can it be understood? In this case, think about the mechanisms and conditions that you have to put in place to the policyholder. Will they require, for instance, financial education programs? Will they require, will the people that you will be working with as partners require basic training to ensure that there is effectiveness of basically marketing this particular product? So think about effective media, and you shouldn't not be confused by a purely sales-oriented marketing measures, because that is what really happens. We usually think that our product is understood because we've just employed sales-oriented marketing measures, and we've not really gone to a point of whereby we kind of bring the value of the our partners to a mechanism of understanding the conditions of our solution. So the second thing is that you need to ensure that your solution is understood. That's a you. The third component is about accessibility, right? In this case, think about the components around having the product features that are appropriate and correspond to actual needs, abilities, and conditions of the client and the target market, but also the conditions of whatever partner that you are having into that particular arrangement. Now, most of the time, again, and this is something that I've seen because I've kind of been in a couple of partnerships. Some were successful, some were not successful, is that we tend not to provide a clear opportunity for all our partners to get access to a number of information, even including on the product that we want to partner on. And that kind of creates a component that in one way or the other, even when the product really gets to the last person on the value chain, who is the policy holder, he'll not be able to understand and know the abilities and know how this particular product will be able to address his needs. So that's an A. Then another component that you need to think about to create the balance in partnership is that your product must be valuable, right? So the product must be able to provide the true value to the client at a price. I think most of the time when we insurtechs or an innovator comes up with a solution, we kind of think that, okay, fine, it can give, you kind of look at the value at the point of how you've kind of innovated your solution. So we need to extend this beyond the value that we see from the insurtech perspective. In this case, the greatest value is that, okay, fine, am I making money, right? And that is okay. Is that you must make money on whatever that you're doing. But does it really provide the true value to the client? In this case, to the policyholder. But also, if you are partnering with an insurer, what value are they gonna get out of the product? So this basically implies that it must have effective protection of maybe that particular policyholder at a very affordable premium. But over and above that, for a clear partnership to work, we must also think about value-added services. And that kind of enables us to have a concrete and tangible benefit that can add the perceived value to the client, because we know that insurance is highly intangible. We want to create value. The first thing is that, does it create value? And the second thing is that, what are other valuable added services can we be able to run on this particular product? So that's IV. Then lastly, think about the efficiency. It must be an efficient solution. It should facilitate interaction between the partners. This means that how often is a solution creating that interaction? Because that's the glue. It should be able to glue the partnerships together. So we've gone, so for a particular partnership to work, at the center of it all is that we must create a product that is SUAVE, SUAVE. Are we able to ensure that our solutions or the solutions that we are creating right now is SUAVE? Thank you.
Thank you, Elias. Thank you. Very exciting thoughts, very insightful thoughts. You talked about simplicity, understandability of the products, accessibility, value addition, and the last bit I didn't quite get, but I think the cohorts have
efficiency.
Efficiency. Okay. All right. Okay. Very exciting. Absolutely, efficiency. Very exciting thoughts. Okay, so we have some few minutes to leave. Very exciting conversation. Just closing remarks, Mr. Tavona, in one word. Just in one sentence. What do you have to tell us before you leave?
I think this is for me, it's a very good initiative that has come on board, and we are looking to forge a few partnerships out of this, and hopefully many more future ones. Thank you very much for your time and attention.
Thank you, Davon. Thank you, sir. Mr. Charles, sorry, Alex, Mr. Alex, I keep mentioning Charles.
Hafiz, thank you very much for the opportunity. Star Life is indeed grateful for this opportunity. We are ready for some deeper collaborations with any of the cohorts. Our doors are always open.
Right. Thank you. Thank you so much. Dr. Tunde, your last words.
Okay. Thanks, Hafiz, for moderating this. Thanks, everyone. It's been good having this dialogue, and to my co-panelists as well. It's been experiential. I mean, to the able disruptors and innovators on the call, I think critical thing I would want to leave as parting is build, and build, right? Focus on building. I mean, there's a lot of dimensions that this takes, right? And the more you just focus and your energy and concentrating on building, there's so much noise and distraction as to, what it looks like to be running a startup generally, these days. There's a lot of noise, right? I think just tune off the noise, build, focus, and you'll come out on top. All the best.
All right. Thank you. Mr. Alex, do you have a comment again? I see your hand.
With doctors, what is it? Background. I just wanted to understand how come Nigerians are yet to go Momo.
Right.
Yes.
Okay.
He has done a lot of research into these areas. So if he can help us with it.
Right.
Okay. So thanks, Mr. Alex. I think that's a very interesting question. And what has essentially happened is, so that is something that has now happened very recently within the space of the last 7 days, to be specific, right? And it's taken that length of time specifically because, so in Nigeria, right, the initiative has always been a bank-led initiative, right, as opposed to being a telecoms or a telco-led initiative, which is what's obtainable in other parts of sub-Saharan Africa, i.e. in Ghana, in East Africa, and in South Africa, as the case may be, the whole of sub-Saharan Africa. So typically, the mobile money framework has always been a bank-led initiative, in Nigeria for reasons, that are more of policy guidelines and institutional foundational policies, right? However, with the back and forth interactions of the stakeholders, the NCC, the CBN, and the critical stakeholders on the call, it has now been shown, not like it was more. Let me put it this way: it was more of a framework approach, right? That was stifling this Momo approach, and I think we're starting to see that reversal now. Although it's not a fully approved telco-led initiative in the mobile money infrastructure and framework, it is still MTN that has gotten this temporary approval, and MTN, of course, being the largest shareholder within the telecoms in Nigeria and most parts of Africa. What we believe is that once they scale through their institutional period of approval, by default, other telecoms will just fall into place and fall into line. So it's really been a matter of the way the framework has been approached, regulatory-wise.
Okay. All right. Thank you, Dr. Tunde. Thank you, everyone. All too soon, we have come to the end of the session. Next week, demo day would be on the 29th, and I believe that Dr. Tunde will join via online. But Mr. Tavona and then Mr. Alex, we hope to see you on the demo day. We have sent invites to all insurance companies, and I believe that it will be exciting to have you to come and see how our cohorts would pitch their solutions to us. thank you everyone for joining. Very exciting session, I believe, and so there are a lot of things that we must key takeaways that we must pick as cohorts to be able to guide us in our propositions, in getting our propositions ready for the insurance industry. On behalf of the FSD, Telistic, and the National Insurance Commission, I wish you all of you the best and hope to see you on the demo day. Thank you. Thank you. Good night.
Thank you.
Good night, Hafiz. Thank you.
Thank you.
Thank you.
Yeah.